Hey everyone, and welcome to Earnings Cheat Sheet for Friday, April 12th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, what's on the docket today?
Want to take a look at Taiwan Semiconductor, Netflix, and Intuitive Surgical.
Right, all great selections, Ed. I commend you on that. But let's start with Taiwan Semiconductor. The chipmaker reports earnings on Thursday, April 18th after the close. And let's take a peek at the cheat sheet. Earnings are estimated to remain essentially flat over the previous year at 130 per share. And the company released Q1 sales numbers on April 10th that showed revenue rising roughly 14% year over year to 18.9 billion. And here's why we're watching. Rising demand for AI chips helped with that Q1 sales beat. And TSM stock could also potentially be setting up here ahead of its earnings report. So, Ed, set the mood for us here. Why don't you? What are you looking at in terms of upcoming earnings for Taiwan Semi? It's one of the first bigger chip names to really come out with results. So, what are you going to be looking at?
Yeah, and Taiwan Semi, it'll probably be coming out early on Thursday, like really early, like 2 o'clock in the morning on Eastern or so. Yeah, this is one of the biggest names out there. I mean, it's a huge market cap by itself, like over $700 billion. It is setting up, as you say, it's one of the first chip makers, but it's not just a chip maker. It makes chips for other companies, and not just any companies. It makes chips for NVIDIA, it makes chips for Apple, it makes chip for Broadcom and a bunch of others. And its growth, which is starting to pick back up, is coming on the advanced chips and those AI chips. So what they have to say will be really important for those chip makers, but they're also a huge buyer of chip equipment. So this is going to be a big deal for Lam Research, Applied Materials, ASML, which reports a day before Taiwan Semi. So really a big deal for the tech sector and the AI space in next week.
Right. And if you missed the first episode of this series, we talked about preparing your portfolio and why it's so important to follow key related names in a certain sector. So Taiwan Semi definitely fitting the bill there, as you said, touching a lot of big names that we pay attention to. All right. So let's take a look at the chart then. And as you mentioned, Ed, we've really seen these narrowing earnings declines here over the last few quarters. And tell me a little bit about here, because it looks like, as the kids would say, it's giving cut base a bit, not hasn't really hit that full 6 weeks yet, but potentially setting up here ahead of that earnings report. So what are you seeing here in the chart?
Yeah, it's going to be, it looks like in a week or so, it'll still be a short consolidation, not long enough to be a full base, but it could perhaps pause right here and provide an entry like off of earnings. But you can see also this is a sort of at almost a pausing right at the top of the old highs. I mean, sort of above there, but if you look all the way to the left, like late 2021, it's sort of finally coming back up to those levels. And so that'll be important. And look, at IBD, we often talk about fundamentals being so important, earnings being so important. So why are we looking at a stock that has lower earnings? Because the chip sector, the stocks tend to turn before things turn around, because you can sort of see, oh, demand is coming, but it's not there. You can sort of see it in the horizon. And sales did pick up in Q1, which we've already got this, already on the table. So earnings are supposed to turn around, maybe not in Q1 entirely, but certainly in 2024 pick up. And so that's why we're paying attention to it, even though the fundamentals on the surface, you go, wait a second, that doesn't look so great.
Right. And I will say, it is nice to see we have this prior run here before this cup with handle base. It's had a nice run since last earnings. It's up about 30% since those last results. So, if you're an investor and you're paying attention to this, what then would you be looking at then as earnings come in, and what are you going to key off of on how the stock reacts?
I mean, well, and as I said, you make a lot of good points about the runs, and the volume has been great recently on the upside. Ideally, it would be setting up and pausing heading into earnings. Now, we'll see if the market wants to wait. That's always been an issue. That's the Taiwan Semi has been pausing in part because the market has been pausing. If it moves out, you could try to take advantage of it as it clears that area. I think one of the issues is that it could get pretty extended pretty quickly. So one solution, especially if it's a big gap up, is to say, well, wait a second, you can buy those earnings gaps, or you can say, I'm going to wait a day or two or a week and see if consolidates and holds those gains and then try to enter. So those are ways you can play it. There's going to be a lot of choices in the days following Taiwan Semi, but this is definitely a name that should be on investors' radar.
All right, Ed, and you also mentioned ASML, another related stock that is reporting the day before. So again, we're seeing some of that potentially a similar action here. Nice gap up after the last earnings, but a little bit of some tight action the last few weeks. So how would you be looking at this chart, and how could it maybe help inform to see what might go on with Taiwan Semi?
Yeah, this is looking quite strong. You say tight area. Heading into earnings, it should have a flat base that you could use from the top of that, or just use like right there, yeah, from the recent highs, and use that as an entry within that. So I think that would be a place you could enter on strong earnings. That'll be coming out early on Wednesday. Again, European Dutch maker here, so that'll be very early earnings. Relative strength line at highs. This has been sort of like, for over time, the leader in the chip equipment space. So this is premier name out there. They make these extreme ultraviolet lithography machines that are extremely expensive, and they have sort of a monopoly on. So very important to see on that. Nice 1-2 punch on terms of the chip equipment and chip making space right there. Really give you set the tone for the chip sector and the technology sector.
All right, well, let's take a look at Netflix. The streamer also reports Q1 results on Thursday, April 18th after the close. And we can take a look at the cheat sheet. Earnings are estimated to rise 57% year over year to $4.51 per share. Revenue also expected to climb 14% to $9.3 billion. And here's why we're watching Netflix. After record subscriber growth in Q4, I'll again remind you that's all thanks to the password sharing crackdown, which I'm still very upset about. The company is expected to see those numbers rise about 13% to 263 million subscribers. We've also seen accelerating earnings growth over the last several quarters, and we'll be looking at how Netflix stock acts as it's approaching those 2021 highs. So Ed, give us a sense here then. Netflix, again, another big streamer, really kind of, I guess, leading the industry, had record subscriber growth last year. What are you going to be paying attention to?
Look, subscriber growth is usually what they care about most, and if they give any guidance on subscriber growth, is going forward, the password crackdown and the ad supported tier have really paid off for Netflix. Another thing is that after a long stretch of, okay, they're having to spend a bunch of money for new content, they're in this golden era. They're getting lots of subscriber growth, but they're able to slash costs because they're not producing much content. They're relatively getting cheap licensing content from other streaming networks, which are sort of cried uncle. They tried to withhold the content from Netflix. Doesn't seem to be happening. So now you have a situation where their revenue should be growing, their subscribers should be growing, and their costs should be coming down, or at least leveling off. So really sort of be able to leverage that in a way. You can sort of see the earnings are starting to turn around quite a bit in the last few quarters. So that should be, even with relatively low revenue growth, should have pretty strong profit growth. So that's one of the things I'm looking for, is the subscriber growth, and maybe what they have to say about content or content costs, either directly or just indirectly. You get the sense of that. Because this is the one that's making it work, really. Everybody else is trying. Nobody else has really figured out how to make a lot of money off of streaming.
All right, well, let's take a look at the chart action. And as you mentioned, really seeing some nice earnings growth here over the last few quarters. And again, we had a nice gap up here on the weekly chart from last earnings, and really looking kind of around the 700 level if we go back all the way to 2021. Ed, what are your thoughts here on the recent action, and what investors should maybe be keen in on as Netflix stock approaches earnings?
Look, it's been acting very well. The relative strength line is at a new high. This stock tends to move a lot on earnings. I mean, it has big moves. 10, 15% moves are fairly normal for this company, and it's had worse, and better. You can't, luckily if you bought it near the original Pioneer buy point, maybe okay, or even the gap up from the last earnings report. Not clear here. It'd be nice if it tested the 10-week line again, but you could imagine if it gapped up on earnings, it sort of feels extended. It wouldn't be breaking out of a base. So you could do it. It could work. It's just a little bit more risk in that involved. And, it's just, you can try and, if you want to play it heading into it without out of position, you can do an earning option, always do an earnings option. But those will probably be pretty expensive because, again, people know that it moves a lot. And so those tend to be more expensive. This might be difficult to play because of those moves, depending on your risk tolerance. But, it could certainly go on another gap up run from here.
Right. And I will definitely be taking a look at how it acts around that 10-week line, especially as it reports earnings. So let's hop on over to the next name on our list, which is Intuitive Surgical. And remember, they did surgery on a grape. Well, ISRG reports earnings also on Thursday after the close. Those earnings are estimated to rise about 15% to 142 per share, and the street expects revenue to climb 10% to 1.87 billion. And the reason we're watching Intuitive, the latest version of their Da Vinci surgical robot, the Da Vinci 5, just recently got FDA approval in March. And over the past few weeks, ISRG stock has been testing a key moving average and again, potentially forming a base here as earnings approach. So Ed, what caught your eye about Intuitive?
Intuitive has been a leader for quite a while. I had some struggles at times, but last year I had some struggles in part because there was concerns about how Ozempic and the weight loss drugs were going to devastate, honestly, the medical products industry and basically anything. A lot of the medical products and systems makers really struggled, but then people realized, well, maybe those are overblown. And so this was one of the early ones to come back, power back above last year's highs into record territory. It has, as you say, the new surgical system that will probably, that'll be coming out soon and rolling out. So it'll be interesting to see what they have to say about growth potential there. And another thing to be looking for is procedure growth. How many procedures are used, because that's not only it's because it suggests how much demand there is, but they make money off the system, but then they also a lot of the little add-ons and there's replacement parts and things along those lines. So that's really important for recurring revenue as well. So beyond the earnings, sales, and guidance, looking for that procedure growth will be really important.
All right, well, let's take a closer look at that chart action then. Again, looking at the weekly chart, as we mentioned, really testing this 10-week moving average here, maybe the last 4 out of 5 weeks. Also looking kind of positive, though, that it's really holding those previous lows. So maybe some people are bargain hunting on this one. But again, what are your thoughts on some of the recent action here?
Look, it's been holding up nicely. It's basically paused right on. If you sort of can see that light green shade near the high, that's the profit taking zone. So after the buy point, often stocks will pause right around this area. Now, sometimes they'll pull back quite a bit. It doesn't have to, but it's a natural area to sort of just take a break. And that's what it's done, but hasn't given up those gains, as you say. It should have a flat base or right around a base, heading into earnings. So that could be something if that, rebounds powerfully from the 10-week line, either from that or from an actual breakout, could be another buying opportunity. And that could also be a positive for other medical product and systems makers that report in the following weeks as well. A lot to like about this name. So it is definitely been one, especially it's like if you're looking for diversification, it's like not everything's going to be AI chips like Taiwan Semi. It's nice to have some growth leaders that aren't so everybody concentrated on the same theme.
Right. We'll just focus on robots on this one. But Ed, so we highlighted a few key earnings, but I know there were a couple others that you were paying attention to. So we can do a quick lightning round there. We'll start with Goldman Sachs, which reports on Monday before the open. So we can kind of see here on the weekly, again, another one that's kind of been moving sideways. We had a gap up a few weeks ago, but again, really looks like it's maybe testing that 10-week line. So what are your thoughts here on Goldman Sachs as those earnings approach?
Yeah, I mean, I wouldn't do anything when those earnings comes, if it bounces off the 10-week line, and that 10-week line test is also sort of like that recent action that it was tight before it tried to move out. It's sort of back to that area, and it's sort of back to where it was at the end of 2022. So there's a lot of trading right there. There's a lot of reasons why you might find support there in this whole area. So if it bounced off of that, I think, from earnings, that could be a way to enter. The relative strength line has not been great, and that's a truth about a lot of banks, is that some of them have pretty good runs, but a lot of them really haven't outperformed. They can go on runs. That's just something to keep in mind.
All right. Well, another financial name that is also scheduled to report on Monday is Charles Schwab. That's ticker SCHW. Again, this one had a breakout a few weeks ago, nice gap up, and now we see it also kind of tight trading action here over the few weeks. What are your thoughts here?
Yeah, this one's trying to rebound. There were concerns over the whole regional bank issue hit this name as well. Coming back, I guess if it comes above that recent tight action within the top of that base, that could be a place you enter after earnings as well.
All right, well, that wraps it up for this edition of Earnings Cheat Sheet. And if you want even more market analysis, be sure to tune into Stock Market Today with Alyssa Quorum and Mike Webster after the closing bell. And be sure to follow us on X or Twitter or whatever you want to call it. You can find us at IBD Investors. We'll be posting a calendar of all the notable earnings reports on our radar over the weekend to help you prepare. So you definitely don't want to miss that. Thanks so much for watching, and we'll see you next week.